Okay, I'm recording.
Welcome everyone to POV Crypto, the only podcast that both Bitcoiners and Ethereans listen to. I'm David Hoffman here with my buddy Christian. Christian, how you doing?
Doing good. Did you know that today is Satoshi's 46th birthday?
How do we know what his birthday is?
He listed on Bitcoin.org a birth date, and it was uh, it wasn't the date of Act 6102 where gold was confiscated or had to be turned in, but it was it wasn't the exact same date of like the act, but it was 42 years ago on this day, which is the day of the act. Yes.
Cool.
So
Happy birthday, Satoshi.
yeah, happy 42nd birthday, Satoshi, and the 88th anniversary of the 6102 Act.
Which banned people from owning gold.
And yeah, it was you had to go turn in your gold, and all gold that was
That's
held in like
fucking
private
ridiculous.
vaulting was
That is
converted
so
at
crazy.
a set rate. Yeah, well, dude, Roosevelt right there. It's crazy he was
Yeah.
celebrated in school, but that's what stuff that he did.
Mm-hmm. Right. Yeah. And like he's very celebrated by the left, right? Like the whole Green New Deal is a celebration of Roosevelt, isn't it?
Yep.
Interesting.
Shows why Bitcoiners are nervous about the left.
Yeah, that makes sense. I think everyone should be nervous about both sides. Like both the right and the left are just weird right now and not on the money.
Very not on the money. I agree there. Big truth. Big truth.
All right, what are we going to talk about first?
Well, wait. Tell me about your bullish sentiment, because it's always good to talk bullishness. And this was your post from Bankless. Today is Monday, April 5th. By the way, y'all be listening to this a couple of days later.
Yeah, so I wrote this piece. Every Monday, Market Monday, is the time to talk about the market in Bankless. So I wrote this piece titled "Crypto is about to melt faces," and I just ran through the list of things that are bullish, right? So last week we had the Visa announcement that it's using Ethereum to settle USDC. Goldman Sachs is scrambling to enable Bitcoin offerings to its customers in attempt to match Morgan Stanley's Bitcoin fund. So now Goldman Sachs has got to do something. It's also we have a historically high quarter for venture funding into crypto. The kimchi premium is back. So on BitHum or BitHum or whatever, the Bitcoin is valued 16% higher than US dollar markets. In 2 weeks, Coinbase's token, or not token, equity will be listed on the NASDAQ. And let's see, what's up? Bitcoin ETF, gotta be soon. It's got to be around the corner. Got to be a couple months.
You didn't even mention in a desperate move to get the premium of GBTC back at least up to NAV. Barry is now offering to move GBTC into an ETF as well as lower management fees. So pretty much what's happening is now with all of this competition against GBTC's Grayscale Trust, the Grayscale shares are trading under the value of the actual collateral that they represent. And that is bad for a lot of people, like BlockFi, like big traders, people that, are in that trade, people that are holding those shares, and now they're down 16% on the underlying value. So Barry's trying to fix that, and he's now submitting what is like the 6th or 7th ETF proposal, and this one is to convert GBTC into GBTC as an ETF.
Right, which makes sense. And we had a Purse on Bankless podcast last week, and she was like, "I don't know why we haven't approved an ETF. Like we should have. Like the market's ready for it." And so, SEC commissioner saying that the market's ready for an ETF, and there's plenty of viable ETFs like ready to be stamped and approved. It's got to be soon. That's going to pump the market. The other remaining bullish things I had are the We have EIP 1559 in July, and then we also have the merge being proposed to come at the end of 2021, which there seems to be all the Ethereum core developers are like, yeah, we could do that. That would be an okay thing to do, which means that we get proof of stake in 2021.
Okay, wait. So yeah, walk me through this. So in July, EIP 1559, which changes the incentive structure and the fee structure of Ethereum, happens or is scheduled to happen. And then at the end of the year, there's going to be proof of stake takeover. Is that what you're saying?
That's what is being proposed and tossed around among the Ethereum core devs.
All right. How confident do you feel on both of those timelines? I think that the latter one is definitely aggressive.
The latter one's a little aggressive. The July EIP 1559 hard fork is happening. That is happening in July.
What are the chances of some big issue related to that?
I'm not qualified to answer that question. I don't know.
Okay.
So yeah, so that's happening in July, and then if all the core devs approve the acceleration of the merge, then in theory that could happen by the end of 2021. I don't know what the dependencies are of the merge. I don't know if it's just like we'll just agree to do it and then we'll do it. I'm assuming it's more complicated than that.
What's do it? Like you gotta be a little bit more explicit here. There's some dumb, Bitcoiners listening to this.
Right. So what this means is that the beacon chain, which is the proof of stake chain that's alive and it's got the heartbeat, the skeleton of Ethereum 2, we will use that to secure Ethereum 1. And that what that means is Ethereum 1 is just being like initialized into the beacon chain. And so the beacon chain is now validating the transactions on Ethereum 1 instead of the proof of work system. And so this is what we call the merge, where we shed proof of work and replace the security with proof of stake.
So what's the deal with Ethereum issuance right now? Is it being issued on both chains simultaneously? Yes. And what happens when there's this merge?
The new issuance on the beacon chain becomes fungible with the current ether on the current chain. And then the new issuance coming out of proof of stake turns into the only issuance, and we stop issuing ether to pay for proof of work.
So this is 100% like bye proof of work. We're turning this off by the end of the year, potentially.
If this proposal goes through and then gets executed, yes, no more proof of work by the end of the year.
So let's talk about the current state. So right now, Ether's being issued on both the proof of works chain and the proof of stake chain, and but that's not fungible, right? Like those tokens are technically they're in separate ecosystems.
You can't even move the ether on the beacon chain. So it's really just beacon chain ether that just exists, and it's waiting on the beacon chain, waiting for the Ethereum 1 chain to get merged, and then for stake to be unlocked.
Do you know what the inflation rate is right now?
The total inflation rate of both systems?
Yeah,
something like 4.7%. Let me go to ETH Hub.
Is there, so on ETH Hub, there's a metric that shows both combined, or it just shows both separate?
There shows a projection of both combined during this one time period. Ethereum roadmap.
There's a link into the chat when you find it.
When I find it. The ETH Hub site is not necessarily the easiest to navigate.
Hey, if it's a side project, it's gonna be just like a bunch of links.
Yeah. Well, no, they did a pretty good job filling this out, but they just never really took it to the finish line. Okay, here it is.
The bull market came too fast.
Okay. Right. So there's the orange line is the issuance rate, and that's the jagged, unpredictable line that Bitcoiners like to point at for the Ethereum's monetary policy, except they'll always forget that it goes down all the fucking time. And then there's this one little blip that goes up, a tiny little amount, where we are issuing an extra little share of the percentage of total supply. And so right now we are at like 4.7%. And then it just drops off the cliff and goes down to very, very little.
So when this ships, and this is projecting it shipping in January. So this is assuming that timeline. But when this ships, it will theoretically drop down to a very low amount. But
Yeah,
I mean, that's
mean,
isn't more than that being issued by the beacon chain right now?
No, I don't think so.
I mean,
Launchpad.ethereum.org. There is 3.7 million ETH with earning 8%. And so 3.7 million times 0.08. How do I do math? This is going to take me a second to do this.
0.08 times 0.08.
So 300,000 Ether is a year is being issued to secure the beacon chain, which represents 2.5%. That doesn't make any sense. I shouldn't be doing this math.
Yeah. So yeah, whatever. The interesting thing here though is like, okay, yeah, it's going down, but it's pretty clearly not. Doesn't look like Bitcoin's. Bitcoin's is step function. It's like it's a programmatic monetary policy where like this is, you can see the difficulty bombs, like these like readjustments, all this like tinkering,
and it'll all be in the rear view mirror.
I mean, we'll see. Part of this is like kind of something I want to talk about is like, what are the properties of money, right? Because you're pushing this ultrasound money meme. You're trying to get memers to meme it, and make ultrasound money swag. But like, what are the properties of sound money, right? I mean, I think at least the way that Bitcoiners define it, which is like slightly different how I guess you're using the terminology, is like predictability. So there isn't really like, if you look at this chart right now on ETHub, we should just like share it for the video listeners, but we're not. It's pretty clearly, not a very predictable chart.
Yes. However, what Ethereum has traded is short-term unpredictability for long-term predictability, while Bitcoin has traded for short-term predictability, but it doesn't have long-term predictability. So that nice, elegant curve of Bitcoin monetary policy, that's great until what's the turkey fallacy? Turkey fallacy. This chart. That chart.
No.
Oops. That's perhaps the Bitcoin like monetary policy. Like because you've traded away, because you can predict it in the short term, you forgot about being able to predict it in the long term.
So how is Ethereum predictable in the long term? Because there's been very many cases where Ethereum has continued to act unpredictable into the future. So where's any precedent that you're actually predictable in the long term? And I really don't think the turkey fallacy makes any sense for Bitcoin. Can you explain a scenario where the turkey fallacy works? Because the turkey fallacy is like, turkey's getting fat, it's happy, all of these things, but little doesn't know that it's in a turkey factory and it's going to get chopped. But Bitcoin's not in a turkey factory. Bitcoin's taking over the world. Bitcoin is turning into the ultimate asset. So like, that's not quite the situation where like it's hostage, it's blindfolded, it's like thinks it's happily moving along. Like Ethereans will talk about like the block reward is going to be Bitcoin's undoing, but there isn't really any precedent to show that.
Right, because there isn't any precedent because we've never seen Bitcoin tested without block rewards because all the block rewards happen at the very start, right? And so all Ethereum's like chaos with developers and tinkering and all of that stuff that Bitcoiners are pointing at, we took care of that in the early lifespan of Ethereum, where Bitcoiners have kicked it down the road and they're going to have to deal with it later because of the nature of the unsustainability of security through fees. Like, and so all that chaos that Ethereum has gone through, Bitcoin is going to have to go through at the end after it's already become integrated into the world's financial system.
I mean, I think that that is unsubstantiated claims about how Bitcoin's going to play out. But
do you
beyond
have
that,
any
can you?
substantiation about like what Bitcoin is secured by fees if it's never been secured by fees before? That is also unsubstantiated.
I mean, the trend of fees is going exponentially up in terms of buying power as well as
Yeah.
overall percentage of the block reward.
Yeah. And it's again, it's not about buying power for non-Bitcoin things. It's about its relationship with
Well,
itself.
both. Yeah, both are going up, and that's a definition that you defined and Ethereum's defined without any pointing to how there's any precedent for that being relevant.
Okay, we can't show you precedent because it's about the future. This is the same
Okay,
conversation
yeah.
we had.
So it's about
So
a model that you made
yes,
about these things being important because proof of stake makes it better.
it's a
That's
model
all you've said.
people at Princeton put together about the
Okay.
economic viability of a public blockchain that is just secured by fees. And then you know what came out of that research paper? EIP 1559 is what came out of that. So like, hey, like here's a way to route around this problem, use this mechanism instead. And Ethereum is like, oh, okay, that's good. We'll do that. Okay, then we can have sustainability. But Bitcoiners are just like, no, we'll just generate a narrative and the narrative will work.
It's not generating a narrative.
It's absolutely generating a narrative.
No, proof of work is extremely useful. We know this. A proof of work network that issues a money that is highly liquid is extremely useful. That's not a narrative. That's reality.
It's the narrative is about how it works in the future. Because how
What do you
Bitcoin
mean
works
how it
today
works?
is not how it works in the
extremely
future.
useful. No, it's going to continue to be
How
useful.
Bitcoin works changes
Show
every
me
4 years.
something that shows that a proof of work network that enables energy producers to access energy demand from anywhere on Earth is not extremely useful in the future.
You're already conflating. We're conflating subjects. That's a different issue.
No,
Energy consumption, proof of work, blah blah blah. That's different.
No. It's absolutely part of the conversation because you're asking how is Bitcoin sustainable? Bitcoin opens up profitability opportunities that were not available before it, and proof of stake is not even playing for that game. Proof of stake is not playing for the energy demand or energy buyer of last resort game. They're trying to get out of that game. So like, what's going to get in the way of Bitcoin? Like that game is not going to stop being useful.
Just Bitcoin having a massive footprint on the real world in terms of proof of work isn't necessarily a net add to the system. In fact, I would say it's a net negative.
Well, I would disagree. I think this is incredibly needed. The system needs an energy buyer of last resort.
I got this comment after Vitalik did his brain dump in the R Ethereum subreddit after our last podcast. There was this comment in there that was something along the lines of like, proof of work is like when Netflix was mailing out DVDs because internet bandwidth wasn't good enough. So we had to do this like digital hybrid analog system where they just mailed DVDs. That's what proof of work is to me. Like it's this hybrid like stepping stone from like the old world into the new world. But what about if we were just in the new world? And that's what proof of stake is just digital only. And a proof of stake network can exist on the internet without any footprint in the real world at all, which in my mind is extremely bullish.
No, that's completely incorrect. There's a huge footprint. If Ethereum to do anything, it takes computers that provide compute to the network. It is a physical network. Okay.
Right, but the computers already exist. I already have my staking computer. It's my like Mac laptop right here.
Okay, no, you created people create demand for those staking computers. You know there's going to be specialized staking computers. Those staking computers are going to be in regions across the world that most likely have actually pretty high and expensive internet or high and expensive energy costs because maybe those energy costs are competing against a civilization. Maybe they're in an urban environment. So the physical network.
It's the energy cost of running a computer.
Look. These staking computers, maybe some of them will be on laptops. A lot of them are going to be on specialty servers. Okay, and those specialty servers cost electricity. This stuff is not negligible for an entire global network that you're claiming to be decentralized. So
the proof
if
of
you're taking
stake network won't consume electricity.
Zero electricity.
Yeah, basically an undetectable amount of electricity.
No, that's completely false. How many
Where does the
computers are going to be
computation
on
comes
this?
from?
Where does that computation come from?
Yeah, it's only one computer at a time. That's the benefit of proof of stake is you have one computer doing the computation and then you have like 3 more checking that one person's work rather than a bajillion computers all over the planet just running through Sudoku puzzles.
We're not talking about proof of stake versus proof of work. I'm talking about there are actual computers that are online all the time that are connected to the internet, connected to the grid, that are doing this one specific thing. You can't say that that doesn't take up resources. Have you taken into account how many resources those things take? How that compares? How about the regions where those computers are located? See, the reality is you haven't even thought about these things. You're just axioms that proof of stake takes up no energy.
It doesn't take up any energy. That's the whole point.
No. That is a complete misnomer. You're saying that the consensus is secured not by electricity. The consensus is secured by stake. It's digital. But guess what? The network, there is a physical network run by computers. That still takes up energy.
The internet takes up energy. Yes.
Yeah, of course. Yeah, I know.
It's marginal.
So does Bitcoin.
Undetectable.
And Bitcoins is useful too because people need energy consumption.
It's only useful because Bitcoin has value. When you say that Bitcoin's energy consumption is useful, it's because it's selling BTC. So it's only useful in the sense that BTC has value.
Yeah, well, guess what? Now people who had energy that either was a negative, as in they had to flare it out or something, or they couldn't actually leverage an asset because there was no economic way to do it, have an economic way to do it by taking whatever Bitcoin will scrap at them, whether it's a small fee or whether it's a massive block reward like right now.
That is a byproduct of the Bitcoin network, not a feature.
No, it's a great byproduct.
Sure,
and it's very powerful.
We can argue
and it's
that,
very real, and it's extremely real. So your models that project that Bitcoin's going to die, they're not taking these things into account. I did not even read this Princeton paper, so I'd like to read it, but I've heard of many academic models that have made some very strange assumptions, like your friend Justin, who I very clearly dismantled because even Vitalik has 5x'd his projections. On your show, he said 5 billion. Vitalik is saying 25 billion. Justin has 3x his projections because he actually talked to one miner. He already 3x his projections. So, I mean, if that doesn't show that he doesn't know what the fuck he's talking about regarding how proof of work works.
Off by 3x. That's not that much. That's not an order of magnitude.
He talked to one miner and then 3x his projections.
He
did not even do legitimate research. No, he didn't even do research. He talked to one guy and he
got that close, and he was doing napkin math, and he was that close. So all he had to do was 3x it. That's not far off at all.
Okay, Vitalik already
it goes from $5 billion to $15 billion. That's nothing.
Look, so no, I'm saying that his admission after just a little bit of pushback from me shows how little he actually knew about it. All it took was a little bit of pushback from not a miner, and he already was taking his position back. Okay, like let's take some like critical thinking here. Okay, this guy's supposed to be designing your entire system. Come on.
This is ridiculous. Okay,
it's ridiculous because you have nothing better to say.
Yeah. Because we're just going back to the same argument that we had last time. It's about the message. It's about the meaning behind how he was able to get to that number so quickly and easily. And then all of a sudden he was only like 3x away. And like, okay, like now he's at $15 billion. Bitcoin is still only secured by $15 billion. Why does that matter? Why does that matter at all?
So no, what you're taking it incorrectly. He did no research. I pushed on him. He did a little bit more research, took a couple more things into account, and 3x'd his number. Okay.
What you're not understanding
still has not done any research.
Why he's confident in what he's saying without doing any research is because it's plain obvious what he's saying. He doesn't need to do research because it's fucking obvious.
So it was kind of hilarious your back and forth with Alex Gladstein last week, where he asked you to show him an example of a proof of stake system that was actually equitable.
Mm-hmm. Yeah, it's Ethereum's proof of stake. That's what it is.
Yeah. So it doesn't exist yet.
Yes, you're correct.
I mean, every time I ask you for evidence, you say it's this thing in our model for the future.
Yes, because humans are good at making models about the future. We have that
I'm
power.
like you know, I'm pretty sure if you went back and you listened to like the Fed records, which are public from like back before 2008 and then after 2008, they talked about their models a lot, and then they
These are
talked
not,
about how
this
their
is not
models
the
were
Fed.
incorrect.
This is not the Fed.
No, it's
not.
people making models. It's geniuses making models, in fact. Very highly accredited geniuses that went to Princeton and Harvard.
Okay, I guess all models are destroyed, I guess, and like we have no models to go off of, and we
All
never should
models
ever
are
go off of
inherently
models.
wrong. All models are
Sure.
inherently wrong.
At least they exist so we can use them for predictive things.
You use them to try to help understand reality.
Sure.
They're only useful for their ability to help you better understand reality.
Sure.
They're predictive because they can help you understand reality, therefore hopefully help you predict, right?
And we've modeled that Bitcoin security is unsustainable. We've predicted this.
Yeah.
People that predict this.
Same people that predict the Fed, that work at the Fed?
No, literally not the same people, different people. Crypto economic researchers who care about these things and are qualified to make such statements. That at the end of Bitcoin's life cycle, Bitcoin goes from producing like one block every 10 minutes to all of a sudden it's a dog eat dog world of miners who won't produce blocks unless there's miner extractable value in those blocks. So they're going to turn off their miners and wait for a valuable transaction to be broadcasted to the network. And then they're going to turn on their miners so that they can race to mine that transaction. And so Bitcoin blocks are going to go between 1 second and 1 month. That is the long-term model that is predicted for Bitcoin, or maybe even longer than 1 month. There won't be any blocks being mined unless there is actual transaction fees to pay for the network. And it's not about transaction fees above zero. It's about transaction fees in relation to the previous history of transaction fees, the volume weighted like average of the last 2 weeks of transaction fees. And so it doesn't matter like what the buying power is of BTC or whatever. It's about the recent history of miner revenue and what is theoretically coming down the pipeline for future miner revenue. And all of that throws Bitcoin into a complete state of chaos because the game theory doesn't
Can I ask you a question? So you guys talk about game theory, but then you never describe the actual scenario. So in this scenario, what is Bitcoin's current state? Like what is its role in the global financial system?
I don't know, but it's been pumping probably.
Okay, so if Bitcoin is really important in the current financial system, do you like think that there's going to be no transactions on the Bitcoin base layer?
No, there will be.
Okay, so the scenario is Bitcoin is expensive and important because people are storing their value in it. There are transactions on the base layer. Okay. Keep telling me more about the scenario where Bitcoin is going to fail because of miners.
It's not about whether or not there are transactions. It's about the volatility in transactions.
Okay. So do you study the Bitcoin mempool?
No.
Do you know what the mempool is?
Yes.
Yeah. So it's the backlog of pending transactions.
Yep.
So the mempool, I mean, it does clear, but it hasn't cleared really right now. So I mean, maybe that trend changes. But if you think about it, the mempool is kind of that is a signaling mechanism of future demand, right?
I'm not saying that there's not
1559. I mean, like right now, I mean, at least there's a lot of signaling that there's consistent long-term demand week over week. The mempool really doesn't clear.
That's not what I'm saying.
Right. So I mean, but I'm trying to understand like
model.
I mean, yeah. So your failure model is not based on how this thing actually works, right? Because like, I mean, I'm trying to understand like, so you're saying that the mempool is going to be clear the whole time, even though Bitcoin is important.
No, I'm not saying that. It's not about the presence of transaction fees or not. It's about the magnitude of volatility in transaction fees in relation to the issuance, which is stable, which at the maturity, Bitcoin won't have any. So one day there's X number of transaction fees. And the next day there's 10X. And the next day there's 0.1X. And the magnitude and the speed of Bitcoin blocks are going to be a function of the magnitude of transaction fees. That's what I'm saying.
Yeah. So what you're saying is like you're gonna wait for a big giant mempool to build up before anyone mines a block, and miners are gonna just hold the network hostage to that. But I mean, that means all the miners have to collude, because the way the game theory works is that any miner can mine a block.
Right.
That's why blocks come in 10 minutes, because all the miners are competing to mine the blocks.
Yes.
So you're saying that things are changing now to a situation where miners are actually holding the network hostage and colluding to not mine blocks until there's a block of sufficient value. Well, they have to collude, because like how do they communicate what's an acceptable block fee amount?
It's about the game theory is about how, because miners always will add more mining hash power up to the value of what they are receiving as revenue. There's always going to be, ultimately at maturity, unless Bitcoin just keeps on pumping forever, and even at that point, it doesn't really matter. There's always going to be ultimately a balance between a surplus and a deficit of hash power. And so some miners will get turned off.
What do you mean a deficit?
Because
I don't understand a scenario. Why are these miners coming offline? Like, what's their benefit?
Because they're not economically viable.
But a lot of these miners are placed in areas where they're already using fuel that is not being used anywhere else.
Can we just do this with Justin Drake on?
I mean, I'd be happy to have him on to, dismantle his arguments with my just silly questions. Here's the thing: is I'm not even an expert, and I can break down these silly models.
I think you think that. I don't think that you are actually doing that.
Bring him on.
I don't think you're doing the thing that you think you're doing.
Okay. What else should we talk about? I want to talk about ultrasound money, because again, I really think that the role of money is dependability, reliability, predictability. Why should I believe that Ethereum is going to have a predictable monetary policy? And when do you think I should believe that?
I think you would more believe that after, how long do you want to have of a Lindy effect behind Ethereum's monetary policy? Only you can answer that question. But I can tell you, if you wait 10 years, Ether price is going to be really high.
Okay, but here's my pushback. You look at that chart. It's not from a sound money perspective. It's about it truly is about dependability of the monetary policy. You need to depend on it. That chart, although it is down, it is it shows tinkering, right? So right now that definition is not really met. So at what when do you think the definition is going to be met? And then at what point do you think it has okay, this is approved, I can trust this? Because you're saying trust it before it happened. It's going to be fine. I'm saying I can't. I'm not
saying trust it before it happens. I'm just saying that that's the alpha, is that Ether is ultrasound money, and if you want to buy it before the rest of the world realizes it's ultrasound money, you can buy it today.
That's the narrative.
It's already checked the box on a sound money culture, with which Bitcoiners checked that box in 2017 with the defeat of Bitcoin Cash, in my mind. Ethereum people checked that box, I think, in 2020, when we started to really just hit the hammer on the value of Ether being a sound money. And so the Ethereum
it's not
culture,
the same thing.
Yes, it is. Yes, it is.
It's not the same thing. Bitcoin Cash versus the some people rallying around the narrative is not the same thing. Bitcoin Cash is a real stand up against corporate interests that were trying to change the network.
Continuing on, the sound money culture of Bitcoin won out in 2017 because of the small blocks emphasize a store of value. Ethereum, and mainly the people like me, Eric Connor, Anthony, DC, Anti-Pro, Ryan, we've been hitting the Ether is a money drum all throughout the bear market into 2020. And at some point, I would say sometime in 2020, that started to really just catch on, probably with the ETH is money meme. And then that embedded a culture of sound money into the social contract around Ethereum, where we've checked that box. And now the Ethereum core devs, mainly Justin Drake and now Vitalik, are saying that the community wants Ether to be money, therefore it will be money. And that is the first box that you need to check as a money, is that the people believe it to be so. Now, the way that it becomes money into ultrasound money is with EIP 1559 and proof of stake. And at that point, so each Ether becomes ultrasound money, perhaps at the end of this year. And then after that, it's just Lindy. So hop on, find the right path in Ethereum's timeline where you want to hop on board and pick your point. But the longer you wait, the higher Ether price is going to be.
So 2021, maybe 2022, and then just number go up, straight up from there.
Yeah, that's the plan.
That's the plan.
That's the plan.
Man, I wonder what happens to plans when they meet reality.
I think we will find out.
Have
you never executed on a plan before?
I mean, I have.
Right. So
there's always a lot of curveballs.
Sure. And they can be dealt with. Like these miners who thought that they could get in the way of the transition to proof of stake and then folded because they realized they had no power. That was a curveball and ended up going away.
Man, that sounds like way different curveballs than Bitcoin's curveballs. It's just like Ethereum is such a different threat model, and it's not even comparable. That's why when you say Ethereum is ultrasound money, it's like hilarious. It's like, do you even know what makes Bitcoin sound?
Yeah, you're talking about the lack of tinkering. Is that what you're referencing?
I mean, like even like the lack of bullying between parties. Like the status quo is the truth versus like we are going to implement our control over the network because we are the community. Right. Yeah, the UASF was a lot of like Bitcoin full node operators say like, you know, we decide, but ultimately like you could have not gone along with them and still been part of the network, still been part of consensus. Like there's a lot of companies that just said, you know, we're just going to run with the old Bitcoin for a long time. I think like blockchain.com put in SegWit like last week, almost 4.5 years later. So like that's the difference in my mind.
Mm-hmm. Yeah, and this is to me, this is
you silly miners.
As to whether or not these systems are protected by people or are they protected by math. And there's always the debate we've had. I think these systems are protected by people.
Yeah. Well, I mean, I think that there's a little physical network.
Sure.
That
That's
exists
managed by people.
Yeah. Well, individual actors that are contributing to the network. It's like, where do you want to zoom in? You know, do you want to see the whole picture? Do you want to be just like a small guy picking around, like picking at like, oh, it's a person who's managing this node and is a part of the network? Like we could argue about that.
Yeah. I mean, what's there to argue about?
No, there's a decentralized network like that is in consensus and it's hard to coordinate those people.
Right.
That's all I'm saying.
The emergent coordination of a mutually beneficial outcome is still possible in a decentralized fashion. And that's what Bitcoiners don't see about Ethereum. They don't see emergent coordination. They see top-down centralized decision-making. And they don't weight any of the community guidance or community demand for the direction of the protocol. And that's their folly. That's their mistake.
I mean, I think it's just about framing. Like, really what's happening is there is a power mechanism that people that you either deem as true or not true rally behind. And, you know, I spoke and they exercise that power mechanism in a way that no one complains about. So that's what you're saying. Like, Bitcoiners can frame that as like, it's centralized. There's clearly an area for the protocol to be changed and like coordinated around. And then what you would argue is like, no, this is consensus emerging, right? So it's really all about framing, right? And what your anticipation about the morality and future attack scenarios of the network are going to be.
Yeah, sure.
I mean, Bitcoiners would frame it as like there's a centralization point where people
There's
can
a
be
centralization point.
that
Sure.
where people that where there's clear control of what defines Ethereum, and the definition of Ethereum has shown to change whether people complain about it or not.
As soon as the Ethereum community gets what it wants, the centralization aspect of Ethereum is going to be slowly eliminated from then on out because it's got what it wants. The Ethereum community allows for there to be centralization as a tool to achieve its desired goals, which is ultrasound money.
Which is something that was decided upon last summer.
Yeah. Well, no, it was named last summer. It was decided upon earlier than that. It just didn't have a name.
Okay, and so I saw you put out a tweet about why Ethereum is ultrasound money because it's it's a declining supply, as well as ultra secure, as well as it's actually it creates cash flow, right?
Sure.
I think. Do you know what tweet I'm referring to? You're like BTC is and not.
Oh yeah, yeah. That was actually I straight up stole that tweet from Lucas, who works at Bankless, as a joke. But yeah, I do stand by that tweet. Yes.
All right, no, break it down because I didn't do it justice clearly.
Okay. I said, hold on. BTC is a fixed supply, non-productive store of value. ETH is a deflationary, productive store of value. One is sound money. The other is ultrasound money.
So what does it being a productive asset make it money? Like, why is that?
I don't know. I just stole it from Lucas. It was mostly a joke. I wouldn't necessarily say the productive aspect of Ether is necessarily the part that makes it sound. It does make it extra scarce as capital and as collateral in DeFi.
Well, the idea there is that there's like a risk-free rate associated with Ethereum because of staking.
Yeah. Mm-hmm.
And that is a baseline of demand.
Yeah, I wouldn't actually.
We're seeing that emerge in Bitcoin, anyways.
I wouldn't necessarily make that a part of the ultrasound money thesis. The ultrasound money thesis is that the deflation is a reduction of supply.
So it's strictly deflation. It has nothing else to do with like the aspect of the properties of Ethereum.
The triple point asset. Yeah, no, that's all the triple point asset. The ultrasound money is, I believe I need to think about that a little bit more, but I'm pretty sure it's just a deflation.
I mean, I would just push back and say that when Bitcoiners say sound money, they don't mean the same thing that you're mean when you say that.
Yeah, are you talking about
just the deflationary aspect? Well, it's not. It's just not even. It's like Bitcoiners would say the fixed supply is ideal because it's known, and at least a known supply would be better than like an unknown supply, theoretically deflationary supply.
Mm-hmm. Well,
and the reason I say theoretically is because you would admit that it under ideal conditions and using game theory, Ethereum has a deflationary supply, but there are conditions where it doesn't, right? There are conditions where it can be inflationary, right?
Right. Yeah, because the priority is to secure Ethereum, not to produce sound money.
Yeah. Based on that, what I would say is the fallacy that Bitcoin is not secure.
Sure.
The proof of the work is not secure.
Sure. The fallacy of the fallacy.
We're stacking fallacies here, baby.
It's fallacies all the way down. So the Gresham's law is that people flee from bad money into good money, or they flee from money that is depreciating versus another money, right?
And so specifically, Gresham's law is in the face of legal tender laws. So I mean, it's questionable whether Gresham actually was referring to, generally speaking, in the market, or
okay. So here's David's law.
Yeah,
here's David's law. People flee from money that is losing value into monies that are gaining in value, just in relative to each other. And so if Bitcoin is holding flat, yet Ether is depreciating, the flow will go from Bitcoin to Ether over the long term.
But Ether going down in supply doesn't necessarily make it a valuable store of value.
Not necessarily, you're right, but
I mean,
it will do that anyways for other reasons.
I mean, so you're saying holistically with the deflation, but just because it's deflating doesn't. So can you tell me more why
Right. So
like deflation plus other things make it a store of value? Because I'm still trying, like I from my understanding, I just cannot agree with Ether is even more sound money than Bitcoin, right? So convince me of that, please.
all of these fees that people are like disgruntlingly paying goes into the value of Ether holders who aren't paying those fees, right? And so how many millions of dollars is being paid for Ether fees as of this moment? Let me find out. Cryptofees.info. Thanks, David Mihal. $18 million today is paid in Ether fees, and under EIP 1559, that $18 million gets deleted from the supply, which means that gets in the same way that Bitcoiners are like, well, when we issue coin, we're actually just borrowing money from the rest of the supply. This is doing the same thing in reverse. It's literally the opposite of issuance. Instead of inflation, it's deflation. And so the value of all these fees that are generated go into
It's consumption.
metaphor.
It's consuming the Ether when you transact on chain.
Yes. And
so
the value of that
what if
gets
people stop
redirected into Ether
transacting on
holders.
chain?
What if? Yeah, that would make Ether inflationary.
I mean, because you're saying that people are going to stop transacting on chain with Bitcoin, or at least that it's not going to be enough to incentivize miners to mine. I'm just kind of curious if a weird incentive like that happens with Ethereum.
That's not what I said. The Bitcoin blockchain will have transactions being paid to it throughout its lifespan all the time. That's not the failure mode I was.
It's just numbers that are going to be wrong number.
It's going to be unstable.
Why?
Because of the volatility in fees.
I think the fees are going to be consistent.
I don't think they will be.
Okay. Okay. Wait. We're talking about Ethereum. So explain to me how it's sound money.
You're saying sound money.
Yeah. So you're saying that the fees are going to burn. It's going to deflate the supply.
Right.
But I would argue that a big part of something being money is liquidity through distribution.
Sure. And
right?
It's got that too.
Yeah, but this destroys distribution because it sucks up feed. It sucks up supply.
It doesn't destroy distribution. It doesn't change it at all.
I mean, proof of stake itself ends a distribution mechanism that proof of work is.
Now, yeah, it's not a distribution mechanism. That's right. But it stops like how many billions of dollars? It stops what Bitcoin 7-day average of $5 million, of fees. It stops that sell pressure on the secondary market. And so it just deletes that sell pressure. And so, no, it's not a distribution mechanism. It's a security mechanism. And that security mechanism makes ETH go up in value. And then people buy it because they realize this, and then Ether gets distributed because people bought it because it's ultrasound money.
Yeah, I mean, maybe Ether is distributed enough. I don't know. I mean, it's like all of these things exist in the wake of Bitcoin. So you're saying that, okay, the Ether supply going down is going to be enough to take over Bitcoin's liquidity advantage because that's part of the formula of something like taking the place of like the global reserve currency. Maybe there could be other things that could compete as like, let's just call it a sound money. But ultimately your eye is on like Ether is going to be the denominator, right? Ether is going to be the best money of the world and everyone is going to flock to it eventually because it has the best properties, right? So, yes. I mean, can you talk to me about like at what point does Ether actually overtake Bitcoin's kind of like global liquidity? Because I think that one of the big bottlenecks to that is the fact that, like Ether's advantage is on its own chain, right? So like Ether's chain itself actually has to scale, whereas like Bitcoin, it only has to scale to on-chain transactions. And as long as it can continue to multiply and decentralize further, and ensure that the ledger is sound, Like that's all the scaling that actually needs to happen on the Bitcoin network. So it's a slightly different by orders of magnitudes, network scaling kind of challenge.
Well, any vehicle that Bitcoin has to scale, Ethereum also has that same exact vehicle.
But that's not where Ethereum's advantage is. Ethereum's advantage is strictly on chain.
Yeah. Mm-hmm. But just because Bitcoin has the centralized institution scale model doesn't mean that Ethereum doesn't also have that.
Yeah, but Bitcoin is already dominant there. Why would someone use Ethereum if they're not going to tap into Ethereum's benefits?
Because Ethereum does have the benefits, regardless of whether you transact on chain or not.
I mean, in terms of the decreasing supply, so that's the one. But its other benefits are tapping into this permissionless marketplace, right?
Yeah, to some degree, yeah. Uh-huh. And that's where like the role of rollups comes in, where like all of the very strong demand to transact on L1, where the fees are super high, that can just be made by different rollup providers doing the whole like shipping container analogy. Like ultimately, at the end of the day, in 30, 50, 100 years, Ethereum, the L1, no one might touch that directly. The only people that might touch it are rollup providers who are transacting on L1 on behalf of their users.
So what if that creates inflation?
No, why would it create inflation?
Because there's no fee pressure.
No. People, well, if there are cheap fees, then people will just use the main chain.
Why? If all the infrastructure is up chain, right? Like you're talking about these disaster scenarios for Bitcoin, but like don't these disaster scenarios kind of exist on Ethereum?
No, because the VIP 1559 is the mitigator of Bitcoin's disaster scenarios and proof of stake and constant issuance.
Kind of. I mean, so it doesn't guarantee that there's going to be low inflation or no deflation or deflation. It doesn't guarantee that. It just all it does is that it's a mechanism based on what's happening.
Yes.
And that mechanism has the optionality of going inflationary.
Yes. If there's no demand for Ethereum, then yes, Ether inflates. Just like if there's no demand for any economy, the currency inflates.
Well, issuance creates. Never mind. I feel like we're going back and forth here.
Yeah.
I mean, we've been going for a little bit over an hour.
Yeah. We should wrap it up.
You got your thing.
I gotta get somewhere to go. Mm-hmm.
Yep. All right. Say hi to the person for me. Yeah. Where can people find you?
Y'all can follow me at, wow, I just said y'all. Trustless State, both on Twitter and on Bankless. Christian.
Y'all's great, man. What are you talking about? You guys can find me at CK_Snarks and at Bitcoin Magazine and at the Bitcoin 2021 conference with pretty much everyone else in the crypto and Bitcoin community. So Miami, June 3rd, 4th, and 5th. Go to b.tc/conference. Get your ticket ASAP. And maybe David and Ryan will be there. But at least everyone from the block will.
There. Ryan will not be there. I might be there.
you should go. Tell Ryan that he shouldn't be scared.
Ryan doesn't even go to Ethereum conferences. He's not going to a Bitcoiner conference.
All right. Well, I take back the invite, Ryan. Peace.